So the first thing that I want to say is within the NPP group, because we're so active on a day-to-day basis within the UK property market, that we think we have a sort of insight that probably lays about 3 months before the press release. So what I mean by that is a usual transaction in property is probably 3 or 4 months these days if people are buying with mortgages. After the purchases, the data is logged. After the press get their hands on the data comes out to the public. So often what we're seeing in the market on a day-to-day level is probably 3 months ahead of the data that's being released by the press. And it's really noticeable for us because we're in the market day-to-day, putting offers in all the time. Now, what we're here to discuss is a hard market versus a soft market. So you're never going to hear from me crash, because I just don't really think that we're going to see one. That's not to say that we're not going to hear about a crash in the press, because obviously the press want to be super negative and super exuberant around their headlines to get your attention and sell papers and capture your attention. That's all good. If the property market slides by 5 to 10% at any one time, they will be talking crash, but realistically, it's just a bit of a soft market. So to be clear, what do I mean by a hard market and a soft market? Well, I'm going to give you 2 examples. 2 years ago, post-COVID, confidence was high, lending was very low, everybody wanting to get into that tangible, insurable asset that is property. Everybody had been scared around the fact that their income could have been taken away from them. This whole COVID scenario really accentuated the need for security and asset. So people poured into the property market. That was a very hard market in my terms. By that I mean when we were trying to secure deals for ourselves and our clients, sometimes we were having to secure the property £10,000–15,000 above original asking price, because there were so many people in the market, the prices were getting pushed and pushed and pushed. To actually close a deal, you might have had to offer over asking. That is a hard market. A soft market then, on the other hand, is when properties are up on the market, whether they're sort of a vendor trying to sell off market or an estate agency online trying to sell property on the market, and there are much less people in the market. Less offers going in, therefore, less competition, and vendors or estate agents might have to be taking offers that are below their perceived asking price. So that's a softer market. It doesn't mean that the property is necessarily devalued in any way. It's just that supply and demand in any market dictates whether the price gets pushed up or it gets relieved. So for absolute clarity, guys, if you're asking me where are we right now, I mean, you know the property cycle. Here's a property cycle. I'm not going to sort of put a pinpoint on where I think we are, but what I can tell you for a fact is that we're in a soft market. And the soft market gives you the ability to get in there, make some cheeky offers and get a potentially below market value property, actually making equity in the purchase. You hold that property for a period of time and the growth will come. So the market is soft now. It is a fantastic time to be buying and bolstering your portfolio or starting your portfolio. Don't let the interest rate, as it is right now, put you off buying. Even if your ROI, your return on cash invested, is down a little bit because the rates are high, you can make money in the buy right now. You can create equity in the soft market by buying right now. Don't miss the opportunity. See you soon.